Welcome back to the Brent Bruce Daily. What a big day we're having here today on February the 22nd, 2023. It is now 5:05 p.m. Central Time because we've had so much going on that I've been trying to research and pay attention to so that I can give you the accurate information. Earlier today, I put out an announcement letting you know that the FHA reduced their monthly mortgage insurance premium by about 35%. Now, I mentioned that I did not have that directly from the FHA yet, and I wanted to hear more details on what that change, how it was all going to work. That email is now out. I do have actual confirmation from the FHA, and I will be going in and looking into that document to make sure that I give you all the details. But I will tell you that this is not effective until March the 20th of 2023. More details to follow. Now, if this information is helpful to you, make sure that you do like and subscribe to the YouTube page because our subscribers are getting this information before anyone else is. And you know that we look closely at the details to make sure that you know how these things really work. Now, after the FHA made their announcement, the VA came out and made a similar announcement that they are reducing the VA funding fee. The VA charges an upfront funding fee for anyone who isn't at least 10% disabled, according to the VA. Now, this is something that is going to help people that are using their VA benefits because it makes the loan cheaper. So that, again, is helping home ownership. Now, we also ended up having a good day in the overall mortgage-backed security market. Let's take a look and see how things went there. So here we are looking at our chart for the day. Ended the day up 17 basis points. The bond market is closed for the day. The 10-year Treasury is down 3 basis points, which is good and good. That's good news. You can see that over here, we hadn't broken all the way below all of these floors of support. We did pull above that throughout the day, and you can see that it was a battle. I mean, all day long, we battled to climb back above this Fibonacci level. We did close above the 99.711 Fibonacci level, and now we are faced with the Fibonacci level above us, which is now our ceiling that we need to get above tomorrow, hopefully. Now, let's take a look and see how that is translating over to mortgage rates. Let's look at the Brent Bruce Daily scenario, which, as you know, is our very well-qualified 30-year fixed conventional home loan with 25% down, 800 FICO scores on a single-family primary residence. I hit the wrong button there. Want to open this up here. This is the parameters that this loan is, just to make sure that I'm in compliance, and you see exactly what I'm running here. You can see that we are currently at 6.75% with a little bit of a credit of $486. I think if we open this up here on United, might have a little bit more of a benefit. Yeah, you can see for $634, we're getting to 6.75. Paying a point gets us down to about 6.375. Let's take a look and see how 11 is looking with the buy downs. It's a little better. So you can get down to 6.625 for only $436. And if you pay just over a point, you're at 6.25. So you can see how the banks do price their business differently. And 11 mortgage right now seems to be the best way to go. Now, here's what we need to understand is coming. Tomorrow, Thursday, hopefully we do continue with this path of improvement to the mortgage-backed security market. But Friday, we have a very important report coming out. The personal consumption expenditures, which is the reading for January, is coming out on this Friday, the 24th. Now, this is the report that I always like to break down my chart that I have. I call it my interactive chart. And it talks about the reduction in the overall inflation reports. And I will go over that tomorrow. We'll take some time and kind of get our game plan for what we expect to come out from the personal consumption expenditures report, because unfortunately, the last two reports that we've had, the consumer price index and the producer price index numbers, while they weren't terrible, they weren't as good as they needed to be. Inflation is subsiding in all of the reports, but it's not subsiding fast enough that we can feel confident that the Federal Reserve isn't going to hike the federal funds rate and go too far. If you've watched my videos for very long, you know that our big concern is that the Federal Reserve goes too far on their federal funds rate hikes and then causes some unexpected consequences that unfortunately we would all have to deal with. So we are hoping that they're going to see inflation coming down through our personal consumption expenditures report that's coming out tomorrow. We will talk about what numbers we're looking for. Make sure that, again, that you have liked, subscribed, share, tell a friend. And I don't know why you would possibly ever get pre-approved or with anyone else when you're looking at those kind of rates and you know that we know what's going on in the market. Make sure that you let me know if I can help out. I will talk to you again soon.